Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value. Of course, the value by the metrics, our buying power, as well as the individual holdings within the portfolio. Take a look at the individual companies and see if there are any that are overpriced, see if there are any that are a great deal right now. And then, of course, take a look at the watch list and see where stocks are at that I'm looking to add to the portfolio, being Costco and Berkshire. So, jumping in for today, we're down $245. There's been quite a bit of red, and I'm not worried about it, and I will tell you why in a little bit. Then that 1 week mark, we're down $400 with about a 1% loss. That 1 month mark, we're down $1,800 with a 3.18% loss. That 3 month mark, we're up almost $4,500 with around a 9% gain. Year to date, we are only up around $5,000 with a 10% return. Then, of course, that 1 year mark, we're up $11,000 with a 25.5% return. And then all time, we are up $28,200 with a 106% return. So, guys, I've been investing since April of 2018. I know I haven't been investing for a long time, but in that short amount of time, we've already had some pretty big corrections. So we did have the COVID drop, and now we have tariffs. So there's already been two really big. I mean, there was COVID, there was the economic shutdown, which it was kind of the same type of reaction, but it was there was COVID, there was fear in the market. Then they shut down everything, which that tanked the market as well. And now we're having tariffs in America, just political issues, right? So I'm not changing my strategy, right? My strategy is staying the exact same. I'm using the dividends from this month to buy next month. That's all I've ever done. There's been a couple of times where I've seen really good deals, like I did Walgreens about a month and a half ago, and I thought that was a good deal. But most of the time, I'm using this month's dividends to buy next month. So that's my strategy, is to just keep growing my passive income month after month. As of right now, I have a buying power of around $30. That is what was left from the Apple and Google purchases, plus the Coca-Cola dividend of $7 that we just got on the 1st of April. So jumping into realty income, this one's still high, I can tell you that right off the bat, but $56.43 is the price right now. 5 shares, $282 of market value. Average cost is around $52 per share. 0.5% of the portfolio is in realty income. Today we're down $3. Total we're up around $23 with a 9% return. Dividend coming in at the middle of the month of $1.34. So that will put us at $30 of passive income / leftover money within the portfolio before the dividend from Altria hits on April 30th, I believe. So not doing too bad here, guys. A nice 8% return. I am still up on it. The market, obviously, it's been higher, but in the past month. But I'm still glad that the stock is above my average cost. But honestly, I would like it if the real estate sector dropped, because I want to buy more of this company. I just don't want to buy it at a 9 to 10% bump up. So my goal for this is to completely, for the entire portfolio, is to completely replace my income with it, but I would like to do that with this single stock, with realty income. Now, it does not grow very much. It's like a 2% growth rate per year, and it would take a crap ton of money, probably millions of dollars, in order to do what I want to do with this. But having that goal, even though it's really far out, even though it's going to be really difficult, is awesome. Because if I have this low growth, barely moving dividend stock replace my income, that means the income from Apple, Google, and Visa, the big growers of the portfolio, is just extra. So I want to pour a lot of money into this company, but I want to do it at the right valuation. So right now I think it's a little frothy of a valuation, but I would love to add more. And I plan on making it back up to like a 10 grand position, because that's where it was before I sold out of it to pay off all my debt, and I sold at a loss, so it actually helped me with taxes. But this is definitely going to be, it's not going to be a top 5 foundational stock for me, but it will be a very large position. I just want to make sure that Apple, Visa, Google, etc. still are bigger than this position. Next up, we got Altria. at 58.03, 320 shares. This beauty's paying us at the end of the month around $18,500 of market value. Average cost is $47.27. Around 34% of the portfolio is in Altria. Today we're up about $300. Total we're up $3,400 with a nearly 23% return. And as I said, a dividend coming in on April 30th of $326. So as of right now, I will have about $350 to buy anything I want next month, which I generally am buying Apple. So the main goal of the portfolio is Altria buys me Apple. Then with the leftover money from that Altria purchase, buying Apple, I will have enough with the AbbVie dividend, which comes in the next month, to guarantee me a share of Google below like $300. And then with the money that's left over from that Google purchase, with both the leftover cash from Altria, the leftover cash from AbbVie, buying Google, should be able to buy me a share of either Coca-Cola or Altria. So technically, I'm reinvesting money back in if that's how how it shakes out. But that's the goal, right? Is even though AbbVie does not pay me enough to may not pay me enough to buy a full share of Google, with the leftover money from Altria and with the money from Visa the next month, I should have more than enough to cover both that Google payment in the third set of months, and with that leftover money carry it over to either reinvest back into Altria or buy a share of Coca-Cola, whatever I want to do. So it's just constantly growing, guys. My passive income every single month, unless I have a dividend cut, is going to grow, and that's been the overall goal of the portfolio. Originally, I wanted Altria to buy itself, which as of right now, I could buy like 5, almost 6 shares of the company, and I could do that. I could reinvest back into itself, but as of right now, I really want to build up that Apple position, and since Altria pays me enough, I might as well take advantage and buy more Apple. Then we got Coca-Cola at $72.95, which is going up right now still. 15 shares of this Dividend King, around $1,100 of market value. Average cost is around $61 per share, so we have a great return here on Coca-Cola. 2% of the portfolio now is in Coca-Cola due to it going up a little bit. Today we're up 2% with a $24 gain. Total, we're up 20.5% with a total return of right around $190. So as of right now, guys, I think the valuation's a bit too high for me. The PE ratio, the price to earnings is 28. I feel like that's a little high. I understand that you do get a little bit of a premium with Coca-Cola because it is the market leader. It's a very well-known brand. It's been around 100 years, and I myself am a very big Coca-Cola drinker. As of right now, I've been cracking on Monsters a lot just because I need that extra energy boost. But I love Coca-Cola. I want to buy it around $61 to $62 a share, so I need it to drop a bit. I'm hoping some type of tariff news affects the market overall, and I can nab up a couple more shares of one of my favorite companies. Then we got Apple, down pretty big today, 8%. I am not surprised here because Apple does a lot of business in China. Tariffs are probably going to affect, out of all the businesses in my portfolio, I feel like Apple is by far going to be the most affected by the tariff news and going forward. So I'm not surprised to see it drop. I'm not worried about it. I love Apple as a business. This is just a buying opportunity. So right now sitting at 204.82. So I'm actually down, which is great. I have 12 shares, around $2,500 of market value. Average cost is around $218 per share. Around 5% of the portfolio is in Apple. Today we're down $200. Total, we are down 160 with a 6.5 or 6.1% loss. Guys, this is a great buying opportunity for me personally for Apple stock. So I will definitely buy it here. Next up, we've got AbbVie at 202. Crazy that right now AbbVie's actually, they're near the same price. But down $2 today. 95 shares, 19K worth of market value. Average cost is $95. 35% of the portfolio is in AbbVie. Today we're down about $250. Total, we're still up 10 grand with a near 113% return. So guys, I love AbbVie. It's by far the best performing stock in my entire portfolio. It's a great dividend growth company as well. And it's going to forever buy me Google, right? So even if it goes down, even if it's not a triple-digit return, I don't care. I'm not in it for the overall growth of like the stock price. That's just gravy on top for me. I am all about the dividend growth. right? This company started paying me at $1.07, and now it pays me like $1.50 something, like 55, I think, per share. So as of right now, it pays me like $155, which is nearly enough to buy me a share of Google for the rest of my life, as long as it stays below 160 or around that price. I'll add extra cash if needed, but that's the goal of the portfolio. So AbbVie right now is fulfilling its purpose in the portfolio, and I'm so excited for it to be able to maybe someday buy more than just one share of Google. Next up, we've got Visa, which is down $3 today, 35 shares, almost 12 grand of market value. Average cost is $3.50. 22% of the portfolio's in Visa. Today, we're down $121. Total, we're down $170 with about a 1% loss total. So guys, I want Visa to drop a little bit more, but I'm excited. This is a buying opportunity. Both Visa and Apple are companies I want to have a monstrous position in. I'm talking like 20 to 30%. I would not mind having like 20% in Apple, 20% in Visa, and then like 15% in Google. I am not worried about having big positions. Obviously, I have 30% of my money in 2 positions right now. 60% of my money is in 2 stocks. That does not worry me at all. But overall, I'm excited about Visa being low. I would love to buy it here. Then, of course, we got Google dipping even further today, 3% at 155. 7 shares, $1,000 of market value. Average cost is around 188. Around 2% of the portfolios in Google. Today, we're down $34. Total, we're down $237 with an 18% loss. So, guys, as of right now, Google by far is the best buy, in my opinion, in the entire portfolio. Now, that being said, as of right now, just because it's the greatest buy, I think when it comes to value, does not mean that's where the money's going to go. I would love to buy more Apple and Visa, because in the standings where I want the positions to be, I do want Apple and Visa. But as of right now, I think the best value play is Google by far. So, and honestly, I think that the tariffs are not going to affect Google as much as they're going to affect Apple. I don't think they're going to affect Visa as much either. I believe MasterCard's more international than Visa is, so I'm not as worried about that when it comes to both Alphabet and Visa. So if we're talking about like long-term economics, I think Apple in the near future, probably in the next 3 to 6 months, depending on how the tariffs go about, I feel like Google's been an opportunity for a longer amount of time, but I think Apple is going to be a golden opportunity, right? Like Google has been below my average cost forever. I've been sitting and waiting to buy more Apple. Since the beginning of this year, I've been purchasing it, but I had like a single share or 2 shares of Apple for over 2 years because I just felt like it hadn't reached a valuation where I wanted to buy it. I tried to be as patient as possible, and this year I said screw it because I wanted to buy more Apple, and now it's paying off because it's it's at a great valuation right now at negative 10% in a day. So I might go back and forth with it a bit and give me a little grace for that, because it's hard sometimes when you've waited so long for an opportunity. Even though Google might be a better opportunity and I do want to purchase it, it's still going to come in second or third place to Apple and Visa. Now, one day Google might be my biggest position, and I'm totally okay with that. And I would hate it if I didn't take advantage of the opportunity, but I really want more Apple. Right. So, and you guys can let me know down in the comments if you think that's a mistake. Maybe I should just sell out of everything and put it all into Google right now, or sell out of everything and put it into Apple, right? Those are valid options, right? Golden opportunities with these high quality businesses do not come along every single day. And it's important to be mindful enough to take advantage, but you don't want to make a dumb decision just because of market fluctuation, right? So with that being said, guys, of course, Costco, I would say, is probably a buy. I'm surprised it's jumping up as much as it is. Tariffs don't seem to be affecting it as much as I thought it would, but as of right now, I wouldn't buy it above, like, I'd say around 280, so it's getting above my buy price. I said $1,000 because it was at like 1,060 for so long, but I need to do more research on Costco before I jump in. That's why it's on the watch list and not in my portfolio. Berkshire, I'm surprised to see it down, but I don't think it's going to be down for long. Everything is going to be affected by the tariffs, by the news. That does not mean everything as a business is going to economically be affected by the tariffs. So that's super important. There's a difference between bad news and bad economics. And that's why I said I think as of right now, Apple, for the long term, is going to be more affected by tariffs than Google. So Google's been down for a while, as Berkshire could be down as well. I don't know how much international business they do when it comes to their insurance, but I know that they do have a lot of businesses overseas, and the tariffs could affect those businesses. So I think a lot of people are going to pour into Berkshire because they see it as a safe haven, because he has so much cash on the side. But I'm still trying to figure out how the tariffs are going to affect the businesses in Berkshire, because they do have a lot of international business. So overall, guys, as of right now, when I'm looking at opportunities, I think today Apple's the best, and then I'd put money in Google. So I'm probably going to end up doing exactly what I did last month. Technically, at the beginning of last month, I bought Apple and I bought Google. So as of right now, when Altria pays me, I'm going to buy a share of Apple. And then when AbbVie pays me, if it's still a great value, I'm going to buy a share of Google. And if I can budget it, some stuff in my life has changed. Like our puppy has arthritis, so I'm paying for medication that's like $60 a month right now. I just had a car repair. I'm getting a tooth yanked out. So I have a lot of stuff kind of getting thrown at me at once. But I still, regardless of if it's $300 or $50, I don't care. I want to be able to put in something in the portfolio to guarantee me that share of Apple's already guaranteed. But once that AbbVie payment hits, if Apple does not have enough excess from the purchase of Apple, doesn't have enough excess cash from that Altria dividend, I will put in whatever I need to purchase that share of Google. And the same thing goes with Visa that next month. So guys, my strategy is not changing. I'm not changing a damn thing. All that is changing is if I plan on buying Apple and say Apple goes back up past where I think its value should be at, I might buy an extra share of Google, or I might buy a share of Visa. But that's it. My dividend strategy is not changing at all. I will be looking for other opportunities. So if you guys see me add like Pepsi, or I have Costco. I've had Costco on the watch list forever, but like maybe Microsoft, or maybe Mondelez, they make Oreos, something like that. If there's more stocks on the watch list, don't be surprised. And just because they're on there does not mean I'm going to buy them, right? Sometimes I just like to watch what certain companies are doing. But as of right now, guys, I'm not afraid. In fact, I am so excited because I think this could be an amazing opportunity for single stock investors. Let everybody else be afraid that Apple dropped 10% today. I'm buying it. Right? Let everybody freak out that Visa's down $6 today. That's great. It's below my average cost. I'm buying it. Let everybody in the world think Google has this DOJ thing going on. There's tariffs going on. What's going to happen with their advertising business? Oh my God, Google's going under. Great. I'm buying it, right? Don't get so caught up in the headline bullshit that you forget that if your favorite pair of shoes, right? If you see the new pair of Air Jordans go on sale for 20% off, you buy that shit, right? If you saw the new Oreo Dunks or whatever they are go on sale, they're $10. They were $5 last month or last week. They're $2 today. They're 50% off. You buy that shit, right? Have the same mentality with your stocks. If you like Google at 200 and it drops to 150 and people are being stupid about it, take advantage of their stupidity, because that's the shit that's gonna make you rich. Those decisions, to make a different decision than to run away, than to be afraid, than to sell out, that's where the money's made, right? That's where I made my money on AbbVie. It is a triple-digit return, and I'm so glad I made that decision. Here's how I think of it, right? I would much rather try to make an estimated guess on where a business is going to be in 5 years, put some money into it, and be wrong on that estimate, than to never put the money in. Because guess what? If I put money in and it doesn't turn out how I thought it would, like I did with Walgreens, I still made $1,200, right? If I say, I think Google's a fucking steal at 153, and I put, anything and everything I have in it, say it's like $3,000, and one day Google goes back up to 180, I would much rather make that, or say Google goes down to like 80 and it doesn't work out. I would much rather make a $3,000 mistake by making the mistake than by never doing it at all, right? I would much rather take the jump and say, you know what, I miscalculated. You know what, instead of Google going from, 150 to 200, it's at 180. I made 1,800 or I made $2,500. I'd rather make money. I'd rather make the mistake by making money than by missing out because I never did anything, right? Like waiting on the sidelines is what kills investors. It's not going trying to learn and put money in and learn from your mistakes and build a great portfolio and learn from your mistakes. That's how money's made, guys. So don't let the fear overcome your good decisions, right? And guess what? Even if it's a subpar decision and you only make a little bit of money, guess what? Or even say you lost money, guess what? You learned from the experience. You learn more from a loss than you ever do from a gain, right? Like it's great that I have AbbVie at a triple-digit return. But if AbbVie was at a negative triple-digit return, I would have learned a lot more. I would have said, you know what? I don't know pharmaceuticals well enough. I made a bad decision. I need to sell out, right? So trust me, this is the time to take advantage. If I had $10,000, you bet your ass, I would be splitting it between Google and probably Google and Apple right now. So with that being said, guys, I want to let everybody know, it's okay. It's just an economic headline. I don't think it's going to be long term. And if it is a long term thing, do yourself a favor and take advantage. So with that being said, guys, thank you so much for watching. Remember to hit the like button on the channel. Like video on the like button on the video. It really does help. And hit the subscribe button on my channel. Remember to also check out shorts, guys. I know not as many people watch the portfolio updates as they do the short form content, which is fine. I do these for me. So with that being said, guys, thank you so much for watching, and I'll see you guys tomorrow with another update. Take care.